you can keep the house of cards alive for a while, but at one point it's going to crumble. And the thing about Bitcoin is that it's not a debt-based system, so you don't have that liability. The Colombian peso dropped 25% against the US dollar. A lot of his family members were panicking. That essentially means that their savings are getting devalued. There was a huge desire to move into dollars and move into Bitcoin. It gets me fired up about what we're working on because you don't have to be thinking about those things all the time. You could dynamically switch from one currency to the other and accept whatever currency it is that you desire. Hand someone what looks like an email address and get paid to it immediately without any delays, without any chargebacks, at very low fees. And it gives me hope.
Welcome to Medium of Exchange, the podcast where we spotlight business owners building on a Bitcoin standard. We explore real stories, practical insights, and why this monetary shift matters more than ever. Today's guest is a powerhouse on building the new rails, the new foundational layer of technology that will empower the scalability of Bitcoin on the Lightning Network. We're going to be getting into what it really takes to turn Bitcoin from digital gold to a true medium of exchange. Jesse Shrader is an engineer turned entrepreneur and the co-founder and CEO of Amboss, a Lightning Network infrastructure provider on a mission to scale Bitcoin payments all around the world. Jesse, it is an honor to have you on Medium of Exchange. Thank you for joining me, my friend.
Jason, it's an absolute pleasure. Thanks for having me on.
You are on a mission to scale Bitcoin payments to the world and turn Bitcoin into a medium of exchange, what I named this podcast. $2 trillion asset, but nobody takes Bitcoin, is what people say. Why is that mission so important to you, Jesse? And what sparked it for you personally?
Really what it came down to was I got super into Bitcoin after seeing some of the dark side of payments in a class action lawsuit temp job that I had, where I was basically providing information on class action lawsuits. So I saw like Wells Fargo stuff. I saw Citizens Bank. Really, I saw people kind of reorganizing debit card transactions and all about overdraft fees. So that was like the darker side. And then as I learned more about Bitcoin, that's when I was filled with hope about what a money could be and what a banking system could be that doesn't involve kind of backroom deals that are adversarial to customers. But then I tried to make a payment with Bitcoin, and that was a really terrible experience. I would love to see a much better payment experience for Bitcoin, and that's what pushed me in the direction of working on the Lightning Network, because the payment experience on Lightning is actually phenomenal because you have this instant settlement, very low cost transactions that are private, by design.
So it doesn't take 10 minutes and it's not expensive. For our listeners, like, what's a sentence or two? What is Lightning? Is it Bitcoin? Has it different?
Yeah, Bitcoin is really in Lightning, it's in a different structure. So you take your Bitcoin, you create a new structure with it that you can kind of think of it like a joint account. One person has some Bitcoin, it's in a joint account with another person. They don't need to trust each other, and both can exit at any point. But while that joint account is open, which we call a payment channel in Lightning, while that is open, you can make payments back and forth like a side ledger to Bitcoin. So all in all, to make a payment, instead of having to communicate that payment to the entire world, which is what an on-chain Bitcoin transaction is, really on Lightning, you're just talking to the other person. That's kind of your counterparty in this joint account structure. So really that means that I'm talking to one person to make a payment happen instead of the rest of the world, which means it's more private. You have instant finality. It's a phenomenal structure for what payments should be.
So Lightning is really what's going to allow for the scalability of running, Bitcoin transactions, the medium of exchange, being able to buy goods and services. And one of the things that you told me one time is that, we're in the middle of this AI boom. The world is fundamentally changing with AI. And you said that the AIs are going to be transacting in Bitcoin. Why do you believe that?
Well, let's think about ChatGPT. ChatGPT takes $20 a month payment, and so they bill that monthly, but they are actually receiving the money much after their expenses, because their expenses come in the form of compute, which is used to train the models. So it's already been spent. The money has left the building. It's paid for compute. And now there's a delay in actually getting that money once they've released the product. And now it's at the end of the month that they're getting that, $20 a month. But like, if you're just going to deal with one model on, let's like look into the future a bit and see that an AI boom has happened. Well, now you're going to have specialty models that are trained on specific things. It's not just going to be one model that is, the end of all knowledge, the summation of all of that. Really, you're going to have experts. And the way to deal with that is not on a billing cycle, not on a trusted payment system, but really on an instant settlement system where you can do micropayments, because then you don't have to introduce this trust between the payer and the payee and the payment network in between. So that's why Lightning is actually a perfect fit for this application, where you can have AI to AI payments even. You don't even need to be a person in order to participate. You can just have instant settlement. And it's completely trustless payments with instant finality. So I can pay per query that I'm doing to an AI model. And that is like one of those key foundational elements to really unlock this AI boom. So we can have, machines paying each other. We can comfortably use our models, and people aren't strapped for cash or having cash flow issues like when they're interacting with this economy.
It seems like the world is accelerating, technology is accelerating, but at the same time, legacy systems stick around over time. How long do you think it's going to take to transition? I mean, think like Visa, for example. They are almost 70 years old. They've been around for a while. Hopefully, it doesn't take 70 years for for Lightning to become the number one facilitator of payments. But what does that look like for you? What are you thinking?
Yeah. And that's actually something that I would love to talk to you about and ask you about, is like the stickiness of payment systems. But overall, I think we've been stuck in this system that doesn't work for businesses at the end of the day, because it's got chargeback risk, it's got high fees. But overall, what we're seeing right now is that the Genius Act just passed, and we're seeing an explosion of stablecoins being issued. Basically, everyone is issuing their own stablecoin because they've seen Tether and the success of that. They've seen USDC and Circle's IPO, like both like incredibly successful businesses. And now we're going to see a boom in stablecoins, and not all of them are going to work out. But one thing that's going to happen is like each of them have their own blockchain, and it's going to introduce this big problem, which is the interoperability, because one blockchain doesn't pay the other blockchain in a very neat and tidy way. But Lightning actually does give us a possibility to actually move that onto the Lightning Network, where you can actually have this interoperability. And that's going to be one of those key pieces, because the rest of the world is going to move into stablecoins. They're going to skip over the legacy payment processors if they don't already have that in place. I mean, if you look at Southeast Asia, for example, like their like card networks aren't ubiquitous, but what they do have is like QR code based payments. And so that is something that they're already familiar with. And so that's going to be a natural transition point where, Southeast Asia is probably going to be much more inclined to use stablecoins or use an electronic payment system that skips over this like credit card system that we have. And I think that's going to be where the adoption is. And on talking about stablecoins a bit, the US is extremely incentivized to start pushing stablecoin adoption for the rest of the world, because they buy US treasuries, because that is what backs the stablecoins.
Yeah. So you think stablecoins could converge onto the Lightning Network for interoperability?
Yeah, I think we're going to see huge boom in stablecoins, but interoperability is the key where, Lightning enables essentially in-flight currency exchange. A payment can start as one currency and end as another. And Bitcoin is actually the common language in between there because you have a token without an issuer. Whereas for all the stablecoins, you do have a trusted issuer that needs to undergo audits on a recurring basis in order to remain trusted.
Speaking of stablecoins and Tether specifically, I found it absolutely fascinating when I found out that they are outperforming OpenAI in terms of, or sorry, their OpenAI I think is the number one like highest revenue or I forget the stat, but basically Tether is just behind OpenAI in terms of something, but then they're number one in the world for profitability. Like they are the most profitable company. Like, and it's not a household name. At this point, OpenAI, ChatGPT is a household name. Folks here in the States, we have the dollar, so no one knows what Tether is. We've got the dollar as a native currency, and we're not trying to flee our native currency to get to the dollar. We already have the dollar. Visa's name comes from universal acceptance. Okay, universal acceptance is where the name Visa comes from, and this idea that anyone anywhere could transact seamlessly. But do you think that the Lightning Network could be the realization of that dream without the gatekeepers, like the foundational layer of money itself, as opposed to a controlled, centralized payment rail?
I think Bitcoin as a whole actually has that quality because anyone can use Bitcoin. Really, where the Lightning Network comes in is scaling those qualities and maintaining the decentralization of Bitcoin. So that's the key piece, and that's really where Lightning fits in. Can you add a privacy layer? Can you enhance the speed of transactions? Can you increase the scalability so that the world can transact over this network? I think that's overall, I think Bitcoin has solved many of these things. Stablecoins address some of these, like open access, but Bitcoin is the least requires the least amount of trust, and then Lightning is just a nice way to scale all of that activity.
What are your thoughts on stablecoins? I mean, I think of it as as someone who has studied monetary history and sound money and Austrian economics. I think of it as like a debt-based fiat token. But I live in a place of financial privilege. There's a lot of folks in the world that don't. There's a lot of folks in the world that need dollars. What is your take on stablecoins?
One of my favorite quotes is Greg Foss saying that the U.S. dollar is the fastest horse in the glue factory. It's essentially the best currency around for the rest of the world.
What is a glue factory? Explain what that is.
So, okay, it's a little bit dark, but basically, you make glue from bones, so like animal bones. So basically, saying the fastest horse, well, the speed of the horse doesn't really matter. It's really the fact that it's in a glue factory means, well, basically, okay, it's going to turn into glue.
Yeah.
So a little dark, but it's a powerful image because we all know about the U.S. debt crisis. We know about the debt crises of currencies around the world, and we know that they're in trouble. And you can keep the house of cards alive for a while, but at one point it's going to crumble. And the thing about Bitcoin is that it's not a debt-based system, so you don't have that liability, and you're holding this token that is actually backed by energy and backed by computers that actually do these computations that help secure the network and control the issuance of new currency. So when it comes to stablecoins, you are introducing an issuer, and it's not as good as something without an issuer. But what it does actually answer is removing the volatility of the currency, versus what people actually have expenses in. And, when you have a mismatch of the value of the currency you're taking in and the value of the currency that you're paying out, well, that's going to cause a cash flow problem, which could be a absolute business killer. And that's not something that people want to deal with. So really matching up your expense currency and your income currency is important. But when it comes to long-term savings and investment, like I think you and I have both arrived at the same conclusion that we actually want to be holding Bitcoin for the long term because it doesn't have this whole liability of potentially being devalued by a massive debt spiral.
So it's a good point. So maybe stablecoins are a good intermediary as we're transitioning from the dollar to Bitcoin. Bitcoin, it is not as stable as the dollar. It may go up 10% today. It may go down 10% or more. And that's a big deal for some short-term payment situations. Do you see stable coins becoming popular here in the United States? Or, I mean, obviously there's a massive use case for them in lots of other countries. But what about here in the United States?
I think there's a major opportunity here because there's a lot of unbanked people in the United States. And, like if you've spent any time in a public library, especially on the West Coast, and you see how many homeless people are essentially using the library as like their computer resource. Like I can't imagine any of those folks actually walking into a bank branch, setting up a bank account, and getting all of their payments needs taken care of, because we know that the banking system is exclusionary. But when it comes to digital money, well, you don't really need to, be a person with full, identity documentation. You don't need to have a permanent address. Really, you need to show up and show the proof of payment. And I think that's where stablecoins fit in the United States, where we've got like a massive like inequality problem. There's a few people with incredible banking access in the United States, but a lot of people don't get access to that system. And I think there is opportunity with stablecoins to address that need. But then the question, for me is like, are all of those systems interoperable? Are they prepared to scale? Will we have like a million, blockchain issues, and interoperability and bridge problems? But really, I think it should be based all around Bitcoin.
I haven't really thought about it that way, that stablecoins could be a really big value add for the unbanked and underbanked population. But then, of course, they need a place to put that money, to buy goods and services. They need a merchant to accept that form of money. And that's where we're a bit early.
Yeah, we're super early. I mean, the Genius Act just passed, and we do know that merchant adoption of stablecoins and Bitcoin has been much slower than expected, especially in the U.S. But it is much more widespread internationally. Where I was, we did take a team trip down to Argentina, and they had a Bitcoin accepted here, like in the store window. We took a bike tour as a team, and I was like, I could pay Bitcoin here, and he was like, yeah, and he sent me an address, and it was a Tether on Tron address. So the education is like not all there for like understanding what type of address it is, but Tether is widely accepted outside of the U.S.
Yeah. So we talked. You mentioned the underbanked and the unbanked merchants, though. Stablecoins could, and obviously Bitcoin as well, could be a pretty significant value add. Really, any like modern payment rail that's not the legacy Visa, MasterCard, Discover, American Express. I get calls all the time. I run a payment processing company, have done so for the last 15 years, and I have all kinds of merchants that I serve all across the country, and they get chargebacks. They are not allowed to process certain size transactions. They're not allowed to process certain transactions in general. They're not allowed to process some foreign transactions. They're not allowed to do it at an affordable rate. There's all kinds of extractive intermediaries that are taking fees. If you have 3% margins, you have 0% margins. because you can only keep 97% of your money because Visa is going to take 3% of it, right? And one of the big frustrations that I get is that you're not, if you accept money, which at this point, if you, for certain industries, you are forced to accept the card brands. You have no alternative. If you are, we live in a digital money era. COVID accelerated that. Smartphones accelerated that. And it's tough for a merchant because they have really no alternative. And then if you accept money, you may or may not get to keep the money. That's the crazy thing, because you have several months as a consumer to issue a chargeback, and that is a really powerful tool for fraud prevention for consumers. It's really, really great. In fact, last week, I saw transactions coming from Costco and Instacart, and I immediately approved it because I thought it was my wife, and then it turns out it wasn't, and so I was able to get the money back. It was great. Here's the problem. For merchants, though, sometimes consumers take advantage of those merchants. And it's fraud, but on the other side. The merchant is the one that's getting swindled. So do stable coins, sorry for my rant. I get passionate about the small business owner community. I've worked with them for a very long time. Do stable coins and Bitcoin Lightning, do they both solve this problem? What would you suggest if you're a small business owner? And where should one go from here if you're currently accepting just the regular card brands?
Yeah, if you're accepting the card brands right now, then that means that you're exposed to chargeback risks. That you're paying a very high rate for payment processing. But you are getting rid of the liability that, accepting cash has for your business. You don't have a whole stockpile of cash, and you're tapping into consumers that increasingly aren't even carrying cash anymore. So it's totally understandable to be accepting cards. But what the opportunity is ahead is that you could actually move to the Lightning Network and be able to accept stablecoins over those rails and essentially unlock the ability to have instant finality. So as soon as a customer pays you, the money is immediately available for spending. You don't have to wait for payment processing, and you're not carrying the risk of a chargeback where that money gets ripped away from your account, because essentially there's no pull mechanism to pull money from your account as a merchant. So that's the really important piece, unlocking faster payments, improving your margins because you're paying less in those payment processing fees, and really just unlocking a better user experience.
Yeah. One thing we've seen, because it takes a couple days to get funded on these legacy rails. And one thing we've seen is, hey, we'll give you your money instantly, but we're going to take another 1%. So now you can only accept 96% of your money. Receive 96% of your money because we're going to take 4% now. But the payment finality piece is still not there. You could still get rug pulled. Jesse, I know you wanted to ask me some questions. What now that we're kind of talking about merchants and chargebacks and payment finality, all these things, where do you want to go from here? Maybe we'll flip the script a little bit, and maybe you can be host for a second.
This is great, Jason. I love that you're an expert on the traditional payment rails, and then I could be the expert on the Lightning side.
The past and the future.
I would. Thank you. I would really love to know what's happening to the adoption of cash. Why has cash gone away? Why are people moving to all digital payments?
For someone who is experiencing homelessness, for example, they are very likely still living in the moment. They don't have a lot of access to technology and computers, and a decent chunk of them have smartphones. I have a lot of experience working in homelessness with my previous company. But beyond that, as you begin to go up in the socioeconomic ladder, it very quickly becomes a digital world. And I think there's obviously a divide between credit cards and debit cards. One is you don't need the money today. The other you do. So for some folks, you're not necessarily trying to get those points. You're trying to stay within budget and keep it simple, and the debit networks work just fine. On a merchant side, the Visa card's a Visa card, and there may be different interchange fees. Certain uh, processors charge a different rate for debit versus credit. The interchange is kind of the wholesale rate. But, these big fintech companies, Square and Stripe, you get no discount if a customer pays with debit card and there's a lower interchange rate. They just have fatter margins. They just make more money on that transaction. But it is increasingly convenient for consumers to pay with a digital form of money. I don't carry any cash. None of my friends really carry any cash. I was biking across the country as part of my honeymoon, and we got to this little town, and it was a cash only town basically. Well, we didn't have any cash, and we're like the big city young digital money folks, and we roll in, and they're like, well, welcome, to this little town. We're cash only. And we're on a bicycle, and we had just biked up a mountain pass. We were exhausted. It was windy. We're on a tandem bike. We're like doing these switchbacks, almost going to fall over on, down the mountain, or go to the other side, almost blown into a car. It was treacherous. And these were really kind people, and they let us have a bowl of soup for free on the house. But it was this really challenging moment where I was reminded that we're just not quite there yet in a fully digitized economy. There are some communities that are cash only, but the number is only going up. Just like Bitcoin adoption is only going up, the transition from a cash economy to currently it's the major card brands predominantly, but digital money is the future. It's just a reality.
Yeah. And one thing I was curious about is like when a merchant actually gets the bill from the payment processor, like where does that, how does that fee actually stack up? Like who's getting what money, and how much are they paying?
Well, there's a few different pricing models. There's what's called Interchange Plus, which is like a wholesale rate plus a flat markup. So think of it like, if you go into a bar and they're like, yeah, we've got cans of beer. Like our wholesale rate is 80 cents, and then we just tack on another 20 cents, and it's $1. I mean, that'd be pretty cheap beer, but you get the point where it's a wholesale rate. So imagine if they're like, we just add on 20 cents to every beer. So this one, our wholesale rate's 80 cents. This other one is $1.20. So in that case, it'd be $1.40. And so that's a common pricing model. There's also the flat rate model, which you see a lot with the fintech, Silicon Valley based businesses like Square, Stripe, PayPal. I think Intuit, QuickBooks does it this way, where it's a flat rate plus a transaction fee. And what they're basically doing is aggregating all their merchants and then making sure that they have margin. And this is why Square changed their pricing model during COVID, because the coffee shops, they were charging under their cost, and they were losing money on every transaction. Because they didn't have a transaction fee. So they were charging 2.6%. And so then they were charging 2.75% with no trans fee. So then they had to change to 2.6 plus 10 cents a transaction fee. Because let's say you run a $1 transaction in this extreme example, and you have, 2.5 cents for 2.5%, and then you have like a 10-cent transaction fee. Well, now you're looking at 12.5% of every transaction. 12.5% of that transaction goes just to fees, right? It's the opposite of Lightning, where micropayments are great.
Actually, on that, like why can't you do a micropayment on traditional payment rails? Why isn't that
Well,
possible?
well, I don't run Visa. I don't know why they don't lower their transaction fees. A lot of it has to do with risk and fraud and just these are legacy systems that were built a long, long time ago, and they're making billions of dollars in revenue. They make a lot of money, and there's a lot of intermediaries too. So there's the card issuer, the card brand. There's there's like an acquirer. There's like the credit card processor, for example. So they're taking on the risk for a merchant, and this is why merchants have to go through underwriting. So if a merchant only has $1,000 in their bank account and they run a $10,000 transaction, and the cardholder calls their bank and says, "Hey, I never got my product or service. I want my money back." And then it basically goes into escrow. Let's say the card brand sides on the card holder, then the merchant goes belly up because the merchant only has $1,000. Maybe they already spent the $10,000. They owe 9,000, but they don't have the nine. They owe an additional 9,000 on top of what they have, and they don't have that. In this case, the payment processor takes on that risk, and therefore they're out $9,000. Well, there's not that much margin in moving money, and so really a lot of what you're paying for is liability and management of risk. And this is also part of the problem. Chargebacks are greater for consumers, but it creates significant fees because the the these centralized parties are very cognizant of what merchants they want to take on, what merchants they want to say no thanks, and it becomes very challenging for the merchant in certain industries. If you're a dentist, you're good to go. If you're a coffee shop, you're good to go. There's lots of industries, though, that it's either not easy or virtually impossible to get approved. And you have to go through these high-risk processors and all these additional hoops, and you have to jump through and barriers to entry where there's limits and all kinds of things. And that can create a lot of friction for the merchant as well.
In college, I was actually living in Humboldt County, California, which was like actually marijuana capital of the world, really. And there was so much like marijuana grown there, and there was a lot of dispensaries there in town. And I learned that they weren't accepted by the card networks, because marijuana is federally illegal, but it was legal in the state, or became legal. And those folks essentially weren't able to do payment processing. And I was asking a couple of questions, to some of my friends that actually worked at the dispensary, and they told me that they got paid monthly, completely in cash, which means that the 20-some employees at that dispensary, like they actually had that amount of cash on hand at one time. And I'm just thinking about the risk that those businesses are taking on because they don't have a digital payment system, and that puts them at risk for armed robbery that could put all of their funds at risk. But I don't know what kind of options do those people have. Can we offer them something either through the traditional payment rails or through Bitcoin payment rails?
I think what you're building, Jesse, is really, really important for the freedom to transact. These legacy payment rails are not eager to begin to take on new industries that are taboo industries, that are not really clear, clean cut. The government's good to go. We've given its blessing. We are happy that this industry exists. They make plenty of money. They process like the world's money, trillions of dollars worth of transaction volume. And so they're not eager to begin to accept those kinds of merchants. It takes time for the Overton window to shift, and for a industry like the cannabis industry to be accepted. So that's why it's really important for builders like you to keep building, to allow for the freedom to transact if you're a merchant as well as a consumer.
What about e-commerce? I know, like, like my company, Amboss, got set up for payment processing online, and I was quite surprised at the fees that were charged. Why is it that e-commerce has to pay a higher rate than kind of like brick and mortar?
Because of fraud, because of last week, what happened with my credit card. It's much easier for a card to get stolen and then buy goods and services online than a physical credit card, because you have the EMV chip, and it's much harder to duplicate now that we used to swipe, and now we dip, we insert the chip. When that transition happened, it took me a while to upgrade all the terminals, but it's way harder now to just copy and paste a physical credit card with an EMV chip. But on the internet, you can just steal the data, sell the data. You have a spreadsheet. You start running transactions. One of the big problems that we see with stolen credit cards is card testing. We have to be really careful with my online merchants, particularly for lower transaction sizes, because these fraudsters will take a database of stolen credit cards, and they'll write a script, and they'll run $10 transactions over and over and over again, one after another. And if you're not really careful with the way you set up your website, then you might wake up the next morning and you have thousands of declined transactions. And maybe 100 or 300 of those 1,000 were approved. The majority will be declined, but now you're faced with transaction fees on all the declined cards and potential chargebacks on all the approved cards, because those are all stolen credit card transactions. And then what the fraudster will do, now that they have the 200 or 300 good ones, is that's when they'll go and buy Apple products or some expensive item quickly, because they know the card is good, and they are ready to start making real transactions.
Wow. Tell me about what's the chargeback experience for a merchant? Like what happens? What's the process they have to go through? Help me understand and be able to empathize with the merchant that has experienced a chargeback.
Yeah, the process is an emotional roller coaster, is what it is. You feel, for me, I just feel so much empathy for these folks, because I've seen the tears in their eyes, and I've heard them get choked up over it, because these are small business owners. They've put their time, their energy, they've paid their employees, they've paid their vendors, they've put in the work, legitimate work. These are just people trying to provide a good service, good product. I've had calls with merchants, $4,000 rug pulled, $3,000 rug pulled, $5,000 rug pulled. It literally just comes right out of their bank account. Now, it gets held in escrow, and the card brands, of course, we've won a lot of chargebacks, and the merchant gets their money back. But it's kind of like a lawsuit. I mean, it's still a massive cost no matter what, even if you get your money back. And it's not like, oh, you had to file a bunch of paperwork and pay your employees to hunt down the transaction and explain that it was a legitimate transaction. Provide a signed receipt, provide a signed invoice, explain that the work was done, provide the photos that the work was done. And you had to pay your employee for all of that. You had to stop what you were doing. You have a loss of opportunity cost. And then you just get your money back. You just get to keep the money that you had already earned. And that's if you win. That's if you win. American Express is brutal for merchants. Now, not only are their fees are higher, they frequently will just side with the cardholder, which is great if you're a cardholder, but this is another reason why a lot of merchants just don't even take it. Or maybe they've started to take American Express because that card brand in particular has really come down in their fees, and they're beginning to become more and more in line with the other major card brands. But then as soon as you start getting chargebacks, it's like, it's so frustrating. And so many of them just won't even take the card brand anymore.
Wow. So, okay, we've got an understanding of kind of the costs that are involved, the fraud, and the chargeback experience. Why is it so difficult for these card networks or payment processings like systems to evolve and to keep up with technology? And do you think that there's an advantage for like open source technology to really move things forward?
I want to go back before I answer that. I want to say one more thing about chargebacks that I just thought of. You're going to laugh. One of the value adds, Jesse, that we provide is that we don't require a fax machine. So many payment processors. I'm not joking, Jesse. I'm not even kidding.
Sorry, what?
So many payment processors, they snail mail the chargeback to the merchant. And the only way that you can provide a rebuttal and get to keep the money that you've already earned is by faxing the chargeback department your rebuttal. You fill out physical paperwork and you have to send it through fax, and they will not receive it any other way. That's very common.
Oh my gosh.
So this is like, I've had so many conversations with merchants and I'm like, oh, we have an online portal where you can actually upload your documentation, upload your signed receipt. You can type your reply and hit submit, and they're like, sold, done. Like, that sounds so much easier. Sign me up.
Thank you for bringing these people into the latest century.
So, but I'm still onboarding merchants from paper checks to credit cards. So this is, your question was, why is it so hard for change? I think is kind of, if I were to just make it super succinct. Change is really hard. Many businesses are run by boomers who have been doing this for decades. And I mentioned Bitcoin to a merchant recently, and she said, honey, we're lucky we even take credit cards. We ain't interested in Bitcoin. And that, I think, sums it up. It's just, it works, just, enough. And so I think that whatever solutions are built over the coming years, whatever solutions are provided to merchants over the coming years, they have to be incredibly simple. And I don't just mean simple to set up or simple to sign up. I mean incredibly simple to use. If the owner has to train their employees, some of these folks have been doing the same thing for 2 or 3 decades. And, during COVID, my kids were not allowed to go to school anymore. They were on a computer. At the time, I had 2 kids on the computer. One of them had a young teacher who immediately knew what to do, good to go. The other one had a teacher who had been doing this for 30 years. And she was an incredible teacher, great teacher. Really, really had a lot of experience, but it was an absolute nightmare when it came to teaching through a computer. She had never taught through a computer before. She had been doing the same thing for 30 years and never done it on a computer. And it was so bad that she would actually teach the kids the wrong thing. There were times when the image was mirrored in reverse, and and my wife, like, this is when she like pulled the plug. She's like, okay, we're homeschooling now, because she taught something that was actually the opposite of what it was supposed to be, because the way the image was displayed, and she had no idea, and the kids were trying to explain that she was wrong, but she's like, no, I'm the teacher, she's the person of authority here, and so it's just tough when you've been doing the same thing for a very long time. And it's tough for younger folks too at times, because small businesses you wear many hats, whether you're the owner or not. The smaller the organization, the more hats you wear. And as a result, they're so frequently overwhelmed. The call to action on my website is not sign up for payment processing. It is not save money on payment processing. It is not submit your chargebacks digitally instead of through a fax machine. The call to action button is end your stress now. That's the button you have to click if you want to sign up for my payment processing company. It's end your stress now, because that is the primary value add. At the end of the day, everything is downstream from that. Reducing fees, making it easier if you do get a chargeback. A lot of merchants don't get chargebacks. It's amazing. Some of them do, though. It's really frustrating. The ability to get approved, the ability to run a large transaction that you're trying to, you get this incredible new opportunity. Your salespeople have been working so hard. You finally get the customer to say yes, and now your payment processor won't allow the transaction. I've had so many of those calls. And I understand where their payment processor is coming from, because they're taking on the liability. If the merchant goes belly up, then they're on the hook for 10,000, 50,000, 100,000, whatever the number is. It's a big deal. It's a lot of money. But I also understand with the merchant, they're just trying to just accept money. It's not that hard from the merchant standpoint.
My God.
Open source, it has to be designed incredibly well, to answer your question. It has to be designed. So I really, really value the open source movement. I also understand where merchants are coming from. And a lot of times the open source tech is not stupid simple, in my experience. And it just needs to be stupid simple, because they're overwhelmed, they're stressed out, and they just need it to work.
And the reason I bring that up about the open source piece is because I've realized that the payment processing systems really have not innovated. You mentioned fax machines, being a critical piece of technology for dealing with chargebacks. And I'm just seeing that these systems are old, they're antiquated, and it's overdue for an update. But those updates haven't happened. Payments haven't moved into the internet age. And the reason I bring up open source is because it gives me a lot of hope about, the ability for these systems to evolve and to keep up with the times. And kind of, and it still maintains some backwards compatibility so that you can help with the switching costs that I think are involved that really prevent people from actually making a change to a better technology.
Yeah, if they can be developed faster, if you can iterate faster, and you have a global movement of developers who are moving this project forward, it could be really valuable for the merchant, for sure.
Man, Jason, it's like awesome to get your insights on these like TradFi payments side. And I hope I can also offer some hope for the future about like what payments could be.
Yeah.
Yeah.
What's the hope, man? What can payments be?
Well, with the stuff that we're working on, it essentially means that you'll be able to receive whatever currency you want, and you'll have instant settlement. So it's send whatever currency that you want to pay in, and the merchant can be able to receive whatever currency that they want to get paid in, which provides an incredible opportunity, because that means that you have in-flight currency exchange that's paying good rates, that it has instant settlement, that doesn't include all the fraud. And you're also set up for the future, because we have things like Lightning address. So you can essentially just hand someone what looks like an email address and get paid to it immediately, without any delays, without any chargebacks, at very low fees. And it gives me hope. If I could share one piece about being here in Costa Rica, is they actually have a system called SynPay, which you could think of like Venmo for Costa Rica. And anybody with a Costa Rican phone number can be able to access this payment system. And it really is incredible, because all the merchant has to do is post their phone number and you can pay to it. And Bull Bitcoin has actually created an integration so I can pay Bitcoin here and pay to any merchant that accepts SynPay, which basically that means that I can completely live on Bitcoin here in Costa Rica. So like, what an incredible innovation that's very low tech. And it does give me hope for the future, because, Bitcoin and the Lightning Network actually map into these systems and help them stay interoperable.
Pretty much every time I get on this podcast, I just get more bullish on I get more bullish not just on number go up and the price appreciation, but I get bullish on the opportunity for impact that we have in the world in and innovation, not just for shiny objects' sake, but to really improve lives in a meaningful way.
It is an incredible opportunity, and that the burden of that opportunity is not lost on me. As like a VC backed company, um, thankfully I have investors that aren't pushing me and telling me what to do. They're asking me, you know, basically, where do you want to be? Who do you want to serve? Like what kind of dreams do you want to make real? And that's it's quite a burden to actually carry that, but it also gives me a lot of hope and a lot of flexibility, because there's a lot of trust there to be able to deliver some incredible products for the future, and set us on a good path that is more hopeful, with Bitcoin.
Jesse, what does that mean for you as a founder building something that is not just cool tech? To me, it sounds like, and I think this is the case for a lot of Bitcoiners, to me it sounds like that there's a deep meaning and purpose and reason for what you're doing, and it's not just cool, it's important and maybe like necessary. And you mentioned carrying the weight of that. What does that mean to you, and why is it so important to you?
Well, one thing is, starting a company, you have to battle through all your imposter syndrome, about actually, am I the right person to do this? And I actually had to ask some of my investors, like, why did you invest in us? And the reason that they came back with kind of surprised me is that, like, we actually have a good sense of empathy, to be able to figure out and empathize with the problems that people are experiencing, and then devise solutions to go fix that. That's where the engineering kicks in. Um, and my co-founder Tony, he's from Colombia, and what I've learned is that the Colombian banking system is actually atrocious. We actually went to go set up a bank account while I was there visiting him, and you literally had to go to a bank branch and pull a number and wait for an hour just to talk to someone behind a plexiglass screen. Um, and it was not a great experience at all. There's also documentation requirements, and uh, while I was there, the Colombian peso dropped 25% against the US dollar. And a lot of his family members were panicking. It essentially means that their savings are getting devalued. So there was a huge desire to move into dollars and move into Bitcoin. And so they, enlisted our help to actually go and help them with this process. And it was not an easy process. It involved us carrying stacks of like Colombian pesos, like layered on jackets across the street down to the nearest place where we could actually make this exchange. And not a pleasant experience in a country that is known for more street crime or crimes of opportunity. And, so it's personal risk as well as just not having the infrastructure that we've become so accustomed to in the United States.
And how long were you there for?
I was there for a month, just in Bogota.
So within 1 month, the currency dropped 25% in value. Here, it's like you buy T-bills and you're getting 5% per year, and it takes 5 years to get to that. And this is 1 month. It's not like it appreciated; it devalued. In other words, if you've saved and saved, you have $100,000 now in savings. Now it's worth 75 over the course of 1 month.
Yep. This is like a daily occurrence in other parts of the world. I had a similar experience in Turkey, and every time I went back there, and like only separated by a month, like I saw that the new price, was essentially like the was let's see, it seemed like the happy hour was kind of like shifting. The like basically the discount price was like the new price, or it was the reverse of that. But
Wow.
basically, all the prices are written on whiteboards or things that are erasable, because the exchange rate is changing all the time. Every time someone is actually charging you for something, they have the exchange rate like price chart pulled up. It's like that they're day trading every time that they do a transaction, which is a crazy experience as a merchant, to be so concerned about the exchange rate. And it gets me fired up about what we're working on, because it essentially means that, well, you don't have to be thinking about those things all the time. You could dynamically switch from one currency to the other, and accept whatever currency it is that you desire.
And what country was this?
So this was Turkey. So I
Turkey.
stayed in
Yeah.
Istanbul. I was being quite the digital nomad. So I stayed 3 separate months. But
Amazing.
like during that time, the inflation rate was over 100%
Wow.
per year.
Over 3 months. Yeah.
Yeah.
Yeah. Okay.
So
Yeah.
yeah,
Yeah. Wow. Man, these are sobering conversations. It makes me really grateful to live in a place of financial privilege, and it makes me kind of awoken and not sad, but I feel kind of stirred. And just moved and maybe sad for sort of some of these folks who put so much time and energy into their labor, and then it gets taken from them. Um, Jesse, you're doing really, really cool, really important work, and I want to support that in any way that I can. And I think there could likely be other folks listening who want to do that. And we're coming up here kind of at the end. Where do you want to send people that may be interested in what you're doing, learning more about what you're doing, and supporting your work?
yeah. Check us out at amboss.tech is our website. You can contact us for really anything, but there's a couple of opportunities. One, if you are already set up with Lightning payments, we've got all the liquidity to provide for you. And if you want to start accepting Lightning payments, be that in Bitcoin or stablecoins, we would love to have a chat with you and get you set up to start accepting these payments, because of all of the reasons that we discussed, over the past hour. And I would love to be able to help people move past it, especially if, your traditional payment processor is not serving you. I'd love to be able to bring on some of the underserved populations, that are out there that are doing real work with real businesses that, may have not been accepted by all the traditional payment processors.
Amazing. Jesse, thank you for joining us.
Thanks so much, Jason.